Plan and trade, trade the plan. In this video, you will receive a trading plan I use every day. It's completely up to you if you choose to use it. You can customize it or use the exact same one. If you do not have a trading plan, then you'll simply fail when it comes to this game. Every consistently profitable trader has a trading plan they stick to. Build a bias, find entry points, define the risk and where you're wrong, define your targets and take profits. Write that shit down, frame that shit, and put it on your fucking trading desk. If you do not check all these factors, do not even bother putting your hard-earned money into the market. By simply following these rules, you'll become a robot when it comes to your trading, and you'll stick to the plan. You will not have your bitch-ass emotions interfering with the trades. Become a robot when it comes to your trades. A robot does not have greed or fear. By sticking to these rules, you'll see your results increase exponentially. You'll be taking setups that only work in your favor, and you'll finally become a consistently profitable trader. Remember, you only need to have a win rate of 30 to 50%. If you have correct risk management and you stick to your plan, your capital will increase over a period of time, and I'll explain this later in the video. Build a bias. First off, see whether the market is going up or down. But don't do this by simply flipping a coin. Have some fucking reason behind your trade. If you think the market is bullish, have a reason to go long. If you think the market is bearish, have a reason to go short. Since we're all professional chart analysts here, we use TA to give us our reason. But you may have some fundamental analysis to give you your reason. This could be news, or you have some insider information. Now in the previous video, trading playlist in the description, I told you guys how to flip your bias as a trader by knowing how market structure works. That's exactly what I do in the first step. I let the market provide me with a directional bias, and that could be bearish or that could be bullish. Here the market is clearly making higher highs and higher lows. That is bullish market structure. In bullish market structure situations, I only find long setups. Any retracement down would be an opportunity to go long again, or some scalp setups. You can see here that we clearly broke bullish market structure, and we have now flipped to bearish market structure. In this situation, any pullback up is an opportunity to go short. Finding entry factors. Entry factors are a specific reason to enter a position. There are tons and tons of entry factors. It really depends on you and your trading style. An entry factor for you may be a candle close below an SR level. Another entry factor may be that price is approaching a non-tested supply-demand level. I'll give you a few examples in this video, but I just want to keep the general overall topic on planning trades and trading the plan. So let's give you guys an example. You can see that price this short-term high, closing above it, signaling that we have a break in market structure. So, as an aggressive bull, I would want to long that. My entry factor would be optimal trade entry. Optimal trade entry is entering on 62%, 705%, and 79%. So I would have my bids laying right here. Now let's refer back to our trading plan and take off the list. First step, build a bias. In this case, we have identified a break in market structure which makes me bullish short term. Second step, find entry factors. In this case, my entry factor would be to enter at optimal trade entry 62%, 705%, and 79%. What if our bids do not get hit? If price does not fill us, we do not chase price and try to enter. If price does not fill us, we go back to step 1. We wait for a new setup, or pull back to present itself, or we simply find a new asset and find a setup there. This is very important, guys, because we want to stick to a trading plan. If our entry factors does not get filled, then so be it. The market will always present a new future setup for us. We just need to be patient. Remember, a trading plan will make you become a consistently profitable trader. This is by taking setups that only work in your favor. Sticking to these rules will result in increasing your profitability exponentially. Let the trade come to you. If it doesn't, walk away. So again, if step 2 does fail, start over, go back to step 1. Plan and trade a plan, period. The next step is to simply find an area that would completely invalidate the trade setup. At this point, we do not have any money in the market until we can define the amount of risk we want to place. Your risk is the percent between your entry and your validation area. So if our average entry is the 705% level, our invalidation area would be below this wick right here. That would completely invalidate the trade setup. Now that you have defined the invalidation area and the percentage away, you can calculate the position size. Let's refer back to the previous example and take off the checklist again. First step, build a bias. In this case, we have created a bullish bias due to the bullish market structure. Second step, find entry factors. In this case, my entry factor would be to enter at optimal trade entry, 62%, 75%, and 79%. Third step, define the risk and where you're wrong. In this case, the trade setup would be invalidated below this wick. That is 2.63% away, and now I can calculate my position size. Define your targets and take profits. Find your targets in trouble areas. So looking at the setup, our first trouble area would be at this consolidation. That would be our target. Now that we have a target, we can see our risk to reward. Entry would be at optimal trade entry. Stop would be invalidation stop, would be right below the wick, targeting this area of consolidation. You can see that this provides us with risk to reward ratio of 3.73. This was a trade announced in my VIP, and we did profit immensely. So let's refer back to the previous example and take off the checklist again. First step, build a bias. In this case, we have created a bullish bias due to the market structure being bullish short term. Second step, find entry factors. In this case, my entry factor would be to enter at optimal trade entry. Third step, define the risk and when you're wrong. In this case, the trade setup would be invalidated below this wick, which is 2.65% away. Now I can calculate my position size. Fourth step, define your targets and take profits. In this case, my first trouble area would be at this consolidation here, providing us of a risk to reward of 3.73. If this was less than 2, we would not take the trade. Now note this, the better the risk to reward, the longer you would stay in this game. So if you're taking setups that only provide a risk to reward of 1 to 2, and unfortunately you get a losing streak, you will not be in this game for much longer. So the best thing to do is to take setups that provide a high risk to reward, generally 3 and above. This will ensure that you would stay in the game for a long run. If the setup has a risk to reward of 2 or less, simply just throw it away and wait for a new one. Now this video is completely useless if you do not follow the steps and take proper action to become a better trader. If you want to know how you can become a better trader, join our Discord channel. We provide educational content and you can ask me and Knight any question relating to trading. If you want to finally start earning from trading and improve your trading skills, click the Discord link in the description below and join us. We will help you and we have helped many others. So I look forward to seeing you guys there. Take action. Thank you so much for watching the video. See you very soon. Stay safe and happy hunting.